Hello, and I'm joined by Chris Slight, Managing Director of Off-Highway Research. And we're going to be talking about global construction equipment sales and looking at what might happen in the future. So thank you for joining us, Chris.
Hi, Andy. Good to be here.
Great, thank you. So if we just jump right in then and start with, I guess, on a positive note and say that sales for 2020 were kind of markedly better than we might have expected in a global pandemic. Could you maybe look at some of the reasons behind this for us?
Yeah, and it's not just that sales were better globally than we would expect in the pandemic. Sales were better than we were expecting before anyone had heard of COVID. In late 2019, we'd seen clearly that the global market had been at a peak for about 2 years, and there are very obvious signs that there was going to be a slowdown. We were expecting a fairly soft landing, maybe about a 5% decline in sales globally. But actually sales throughout 2020 stayed more or less level with where they were at 2019. So again, completely unexpected result that the global market was better in a COVID world than it would have otherwise been. Of course, you have to unpack that, and the one reason is China. In sort of March and April 2020, as China emerged from its national lockdown, the government put enormous stimulus in place, and construction equipment sales went absolutely through the roof. Again, the previous expectation for China was that the market would decline in 2020, and we had seen signs of that the previous year. But rather than declining, the market shot up by 30%, which is a staggering amount. And we see a little bit more of an increase this year. So the sales volume in China this year will approach 500,000 machines. Obviously, by far the largest construction equipment market in a year. Sorry, by far the largest construction equipment market in the world. And those volumes are comparable, if not a bit higher, than what we saw in 2010 and 2011. So China was the thing that made the difference. The other thing I would add about the other markets around the world is things weren't as bad as maybe they could have been. When the pandemic struck, we were sort of trying to work out what the impacts would be, as was everybody. And, our sort of gut feeling and what we were seeing and what we were hearing in terms of how people were seeing their orders and their production affected was that sales would maybe be down 20 to 30% in 2020. As it turned out, globally, sales were down about 12%. So clearly not as bad as it could have been. And in some markets were better, some were worse, but some barely saw any decline at all.
Okay, great, thanks. So if we touch a bit more on China, then, as you said, kind of China was the key really kind of last year. I just kind of wonder, in the past, when the Chinese government have kind of invested a large stimulus, we have seen a crash that's followed. I kind of wonder if you could give us your expectations for the next few years for China.
Yeah, you're absolutely right to highlight that as a concern. There was this huge boom in 2010 and 2011, and the 5 years that followed that were just horrible. The market just fell and fell and fell to an incredibly low level. So yes, there were a lot of issues because that stimulus money kind of came and went very quickly. Construction activity fell away, but of course you still had this big population of quite young machines that didn't really have any work to do. While there will be a correction, of course, in China after this stimulus has passed, the downturn will be fairly big because the market has risen to such a high level. We don't foresee such a dire situation as we saw in the early 2010s. I think a couple of reasons I would highlight for that. One is that although we're talking about a boom in volume terms, the kind of the composition of the market is different this time around. A lot of the growth has been in compact equipment, which in China really means mini excavators. So, and the reasons for that are, of course, sort of slightly different. One of them is that you're getting a lot more equipment sales in rural areas for smaller scale construction and also for agriculture to a certain extent. And that's sort of one of these long-term trends that just won't change. You have an aging workforce in a lot of these rural areas, so the workforce is shrinking. You also have wages rising, so the balance has kind of been tipped in favour of mechanisation. So I mean that's kind of a permanent structural change which we feel has happened in China. And the other thing is that the whole sort of nature of the work in China has shifted somewhat. Yes, of course, there's still big road, rail, airport projects going on, but there's also as a repair and maintenance market emerging, which of course kind of demands a different type of equipment, but is also a sort of a steadier flow of work. It's not a case that you have this big project, it's done very quickly as they are in China, and then boom, it's gone and all this equipment sitting around. Repair and maintenance is obviously a kind of a steadier flow of work. So we expect more stability going forward. So yes, the market will come down, but we're not expecting the sort of prolonged depression or crash that we saw 8 years ago or so.
Okay, thanks, Chris. And you touched on kind of compact equipment there. I was just kind of wondering if there were, in terms of the kind of construction equipment itself, if there are any trends that maybe it'll be interesting to highlight for us, and kind of maybe one of them might be compact equipment being more popular than ever before.
Yeah, that's certainly something we see. Again, it's one of these things that is driven by long-term societal changes. So you don't necessarily see it year to year, but if you look over a time scale of decades, you certainly see the emergence of mini excavators in particular. It's a fairly worldwide phenomenon. Even in countries where, which don't have a lot of money and where there is a big sort of pool of manual labor, you do see mini excavators being sold. And India is an example of that. There is a smallish mini excavator market there now. Not many numbers, in the context of the Indian market, a few thousand a year, but it was 0 10 years ago. So that is fairly universal, we would say. And I think one of the things in the current sort of climate which has driven that is that over the sort of the pandemic period, compact equipment actually had quite a good run. You particularly see that in North America with sales of compact track loaders, which really shot up last year. And that's really been driven by residential construction in developed markets. It is residential construction that really matters for compact equipment sales. And one of the reasons for that is this sort of slightly freakish sort of consequence of COVID of so many workers working from home. So a lot of people extended their houses or built an office in the garden or something like that, so they could work from home. So not something you could have anticipated, but it did give a little boost to the residential construction market and residential improvement. So that was a one-off. But as I said, long term, as construction workforces age and get more expensive, it's an industry that's just going to mechanize more and more.
Definitely. Thanks, Chris. As someone with 2 young children, the idea of having an office in my garden, I can see why more and more people would want to be doing that. So kind of looking at the global market, then I just kind of wonder if you could give us an overview of off-highway's kind of sales expectations for the next few years.
Well, this year will be good. I think that's very clear. You're seeing that in, we saw an upturn start in the second half of 2020, and you've just seen in first quarter results that has continued. There's been further growth in sales. Profitability has ticked up again for pretty much all the major OEMs. And they're all very upbeat about this year. The problem they have is actually meeting demand, and maybe that's something we'll come on to later. But yeah, this year will be good for the industry. We think there could well be a record volume of equipment sold worldwide. Moving further on, I think, and this is where forecasters like myself start to look a bit shifty and uncomfortable. I think you have to recognise that economically we're in an artificial situation right now. Governments are still doing a lot to support businesses, a lot to support jobs and retain jobs. And as we emerge from sort of our COVID lives and get back to normal, that support will taper away, and businesses will kind of have to stand on their own 2 feet. So there is, the obvious worries are that unemployment will go up, or in some countries where people were laid off, that those jobs kind of won't come back, and what was assumed to be temporary unemployment will turn out to be permanent. And also the amount of money that has been spent on supporting society through this pandemic has been enormous, and governments have to deal with that somehow. So you would expect a period of economic weakness, and that will of course translate to, I mean, that's fundamentally what drives construction equipment sales. So that will trickle down to our industry. I think the other thing that we watch with interest is what happens in the non-residential construction market. Obviously, people like you and I and many other people around the world have worked from home for more than a year, and it's worked. We've continued to do our jobs, and in some cases it's worked really well. So you kind of question whether there's a need for, I think we will go back to the office, but do you need all the office space that you had before? And I'm sure there are CEOs around the world who are kind of looking at the bill that they get to rent a skyscraper in London or Manhattan and go, look, hang on, this is a staggering amount of money, and it turns out we don't need it. Similarly, I used to travel the world. I used to spend about 100 days a year in hotels all over the place, visiting my clients, going to trade shows, going to conferences and things like that. And again, I managed to do my job last year with through this medium. It costs a lot of money to fly around the world. So again, it's not just the need for the service, it trickles down to the need for that sort of infrastructure. So do we need as many offices? Do we need commuter infrastructure? Do we need hotels? Do we need airports? Do we need railways? That all feeds through to the construction market, and therefore the construction equipment market. So I think non-residential building is probably in for, a bit of a fundamental change in the sort of the post-COVID situation. From the point of view of earth-moving equipment, the equipment we look at, that's not a very big factor. The type of equipment that we cover is all about countries kind of building horizontally, if you will. When people build up, they need things like tower cranes and hoists that we don't particularly cover. So it may not affect the market that we look at that specifically, but I think it will affect certain types of equipment and probably certain types of contractors that specialize in those fields.
Great, thanks, Chris. That's really interesting. As you say, it'll be interesting to see. This affects, it's not just offices, is it? It's airports and trains, and it's everything that could change, couldn't it? My final question really is kind of one on the kind of the supply chain, because you kind of mentioned it there, and I've kind of heard it said from a few different people that they think that might be one of the things that actually holds back the industry's growth. Not so much the lack of demand, but being able to get all of the components and available parts out.
Yes, so there are a couple of things to highlight here, I think. The first point is that we've seen in the last 2 peaks in the equipment cycle that when we get the kind of volumes that we've seen of more than 1 million units per year, something gives basically in the supply chain. The previous time it happened was the sort of the mid 2000s. And there were all sorts of things going on. For example, there was a shortage of large tires for dump trucks, and that kind of sounds almost surreal, but there are only sort of so many companies in the world that make these. They're big and they take a long time to make, and if you can't put a tire on a dump truck, you can't sell a dump truck. In the sort of the 2018 2019 peak, there was a bit of an issue around hydraulic components, actually, as there was in the previous peak, and again that was a bit of a break on the amount of equipment manufacturers could produce and get out. As I said right at the start, we're still seeing those sort of levels. I'm not hearing anything that it's sort of specifically this or that this time around, but it is clearly an issue that the industries that feed the OEMs are kind of strained. I think what you have to add to that is sort of bear in mind that in 2020, production was affected for everyone and production kind of ramped down. So those supply industries are probably still coming back. You know, you're talking about very heavy industries and you can't just turn it on like flicking a light switch. And the other factor, which is, I think, specific to where we are now, is one of the actions that everybody in the industry took last year was to run down their inventories. You know, of course, you're going to do that in a time of crisis. You know, you want to kind of convert those machines to cash and get them out and protect your business in that way. So the industry has kind of hit this big upswing in demand that we've seen in the last couple of months, with not enough components to feed its factories and no inventory either at the factory or with its distribution channels to kind of feed that demand. And you see that for sure. You know, you see the orders going up and the backlogs kind of running away a little bit. Those that report order backlog, the book-to-bill ratio for that sort of group is as high as it's ever been, really. And you kind of also see it in what is perhaps positive for the industry, and the price realization that they're achieving for their machines is going up, although probably not as much as I would have expected. But that may be something that comes later in the year. And of course, anecdotally, we hear about the very, very long lead times for sort of fairly straightforward pieces of equipment. Never mind, it's a special option or a special variant or a one-off. It's just fairly standard high volume products that customers are going to have to wait a long time for. And of course, there's the unexpected. You know, a ship getting wedged sideways in the Suez Canal for a week is not exactly conducive to the flow of excavators from Asia to Europe. So, you know, strange things cause a problem as well.
Yeah, that didn't help matters, did it? Definitely. Okay, great. Well, thank you very much, Chris. That's a really interesting kind of overview of the global construction market and kind of what we might see in the future. So, yeah, Chris Slayton, Managing Director of Off-Highway Research. Thank you very much for your time.
Thanks for having me, Andy.